Quantitative easing is really controversial, and this argument among economists is now playing out on the editorial pages. A group of economists and, political thinkers put together a letter bashing Ben Bernanke and his decision to go ahead with $600 billion worth of bond buying. They say it's a risk to the broader financial markets and going to be a problem for the exit strategy of the Federal Reserve. Well, we asked David Blanchflower, who's been a former central banker himself, what it's like for Ben Bernanke to get a letter this critical, this vocal, this open, when he's trying to help boost the economy.
Well, Ben Bernanke would probably not be surprised to see a bunch of Republicans playing politics. I think it shows very little understanding of how monetary policy makers behave, none of whom have actually made any kind of monetary policy decisions. The Fed has the benefit that it can make decisions and quickly, and we're in a situation where the Congress is stultified. So there may be things in the letter, such as, I'm just looking at it, we'd like to see improvements in tax spending and regulatory policies. Well, absolutely. But that's not going to happen, for a very long time. So the Fed is the only show in town. And the whole point of this exercise is to raise asset prices, get us out of deflation, and try and depreciate the dollar to stimulate the economy. So these people are on the side of the mistakes of the 1930s. If you do what they say, they'll push us into depression. So this is really just politics. Doesn't make any sense. Shows no practical understanding of how the economy works or how monetary policy makers make their decisions. I think it's just playing politics, dangerous politics, playing with an economy that's fragile and unemployment remains high. So I think this is dangerous politics.
But the Fed's supposed to be apolitical, so why try to politicize it if you are just betting that the changes have to be on the fiscal side?
Well, I don't know. I mean, these folks are politicizing it. I mean, it looked to me that it really was the only show in town, mostly because these folks are advocating cutting fiscal spending at a time when it's quite clear you should be actually adding stimulus. So the Fed, in essence, is saying these folks are wrong. If you like, the things that are happening on the fiscal front, the Fed has to compensate, that these folks advocate, the Fed has to compensate for because they're so wrong. The worry is that the economy is slowing. I don't actually understand what these folks think we should do to get unemployment down. They have no idea, so they're just playing politics with the economy and with the poor unemployed who are sitting out there, and at least the Fed is trying to do something about it. Shame on them.
So, I mean, do you wholeheartedly support QE2, the $600 billion? I mean, do you think that the Fed should continue to go along with the plan?
Absolutely. I've advocated it on a number of occasions. I think they did the right thing. They had really very little alternative, especially when the market had actually built in those expectations. They certainly wouldn't want to have a negative surprise. And it's interesting to say that other central banks have kind of greeted, this is what they say in the letter, have greeted this negatively. Well, Chairman Bernanke's remit is to worry about the United States, not other central banks, not the UK, not Brazil or any place else. His job is to do what's best for the United States. Once you find the G20 consensus breaking down, then you're on your own. And I think you should have done this, and I think the UK should have followed, because it didn't follow and do more QE. Exchange rates appreciated, and it's made it more likely it's going to have to down the road. So I think Chairman Bernanke and the Fed have actually taken the lead, shown they're on top of this. They've performed the best of any economic policy agency, and thank goodness they haven't listened to these folks who would drive us back into recession and probably depression. So I think this is just bad economics driven by politics.
Well, there are plenty on Wall Street, though, who say, we've heard this story before. If you keep rates this low for this long, you make money this easy, it's going to inflate asset bubbles. There are those who say, look at some of the commodity markets right now. We are seeing bubbles. So, I mean, to what degree does it risk an exit strategy?
Well, obviously there was a worry about an exit strategy, but Bernanke himself made it clear this is not about trying to create an asset bubble. This is trying to get us out of deflation, get us out of, from -2% to +4. It's not about getting us to +4,000. And in any case, monetary policy makers know what to do. Once you get inflation up, we know exactly what to do. Exit strategy is not very hard. Blanchflower can fix it in a minute, which is raise rates and start selling this stuff off. It's not very hard.
When would that happen? When would you raise rates?
Well, when inflation's up and we're out of this difficult situation, unemployment starts to fall, but it has to be driven by events, and we're not there yet. So I think good on Bernanke.
Watch InBusiness on Tuesday. We may get some clarity, some insight into what will be happening to help stabilize Ireland, Portugal, and Greece. Sovereign debt once again in the headlines, and finance ministers are meeting tomorrow.